fact, let's welcome on board Deven Choksey as well of KRChoksey to talk about this and a lot more. Deven, what's happening with the Piramal Group if you track that one closely? Because you have Enterprises, which is doing a buyback. The stock is still seeing quite a bit of pressure. And then Pharma, it was expected to be the cash cow for the company. But since it's listing, it's managed to disappoint.
Honestly, Anisha, I haven't, I think, looked into this particular company at this point of time. Would probably, I think, give my opinion at some other point of time, I believe.
No worries, but I'm sure the one that you definitely track is Maruti. There's no denying that. So talk to me about what's your takeaway of the earnings and the fact that they have now going to take over the manufacturing from Suzuki as well. It was an overhang at one point of time. Do you think that will still play out?
Well, I think Maruti remains fundamentally, I think, a very strong pick, I believe. I think the last year and earlier, I think whatever the issues that they were having pertaining to the production due to the chip issue, I think they are behind. And I think one of the important change in the strategy which I am observing in Maruti, they are basically focusing now on more higher value products. And that is where probably I think you are going to see the larger amount of contribution into the top line, of course, but more importantly, I think the company's bottom line. Up till now, I think the number of units on a volume basis, I think they have always succeeded. But overall, I guess I think the profitability is going to come from the bigger vehicles, I think, which they are basically selling now. So Maruti, for me, I think it looks like a game changer kind of a proposition which is emerging for this company. Also because of the fact that the hybrid vehicles that they have started putting across onto the road, it is eventually, I think, leading them to the electric vehicles going forward in next 1 and 2 years time from now on. And given the strength of Maruti for distribution and the production, I believe that I think this company should have an edge going forward. So certainly Maruti would become an opportunity to buy into the portfolio at every point of every correction point in the marketplace.
All right. Hi, morning, Deven. There's also a latest note that's come out by Investec on PB Fintech. They've initiated a buy. They've got a target price at about 1,000 rupees, saying that profitability has been understated and margins will continue to improve. What's your outlook on a PB Fintech if you track the company or any others within the new age tech space?
So, Evan, good morning. And well, I think the company remains promising as always. And probably, I think this is where one could possibly ask uh, for the look into this company. Honestly, I think this particular company's result, I have not gone into detail at this point of time, but do believe that I think the underlying potential would remain very, very strong. And given the fact that they are now having more profitable products to tap, this is where I believe that I think this company should be relatively better going forward. Uh, I think that I think the overall other fintech space, if you are asking for, I think each and everyone is having the promises to make. However, at the same time, the challenge remains on the profitability. Going forward, the profitability should be the focus area as far as these businesses are concerned, and that's where we are keeping an eye on. Still, we at this point of time, we believe that they have potential, but we have not added this stock into the portfolio. So certainly, we do not have any recommendation currently at this point of time on this company.
Okay, has the potential, but still waiting and watching of how the profitability really progresses because promises galore, whether they deliver or not, that's the big question. But what has not been delivering, Devane, is also the entire chemicals basket, right? Whether you look at the earnings of this quarter, right, from a UPL to a Naveen Fluorine and others as well, it's not been healthy at all. In fact, for UPL, of course, an agrochemical, but that's been dismal with respect to the guidance and the commentary. What's your suggestion if anyone holds these stocks?
Well, I think the worst seems to be getting over. That is one thing for sure. After seeing the results of UPL and at the same time studying the specialty chemical businesses in particular, the specialty chemical businesses probably are facing the situation of overstocking, and as a result of which, many of these companies are basically running at a lower capacity utilization currently. So certainly, in the near future, if you are asking for this quarter as well, I think things are not looking as pretty as otherwise it should be. Maybe China factory is also playing a bigger role. In many cases, I think the prices are subdued significantly, largely because of the higher production from China and sort of a dumping which is happening into the global market into different category of chemicals. So that is where probably I think you are seeing the higher pressure on the Indian companies' margins also at the same time, and which is reflected in UPL's profit performance as well. So from a perspective of looking at this company, I would think that I think though the worst is getting over, maybe I think 1 quarter more till the time I think we get the inventory clearance picture emerging out. I would think that I think if the pain continues, maybe September ended quarter and after, I think one could possibly once again have a relook at these businesses afresh and start thinking of adding them into portfolio. Till that time, I guess it is going to be dragging into the as far as their price performance is concerned.
In your call, as far as the entire real estate basket is concerned, and DLF specifically, if you track that one?
Overall, I think the real estate remains absolutely convincing story. I guess I think in different pockets of the country, and more importantly, other than metros, also I think many of the companies are basically having larger amount of demand scenario. Not very surprising though, because in each market, I think be it affordable segment of market or be it I think the the normal real estate market or the premium housing segment of real estate particularly I see a good amount of demand uptake is continuing, which is also getting fairly validated with the lending by the housing finance companies. Housing finance companies are reporting 20% plus kind of a AUM growth. And that is where probably one gets a complete feeling that in the real estate business, the demand scenario remains intact. I think that next 3 to 5 years time, I think at least from now, the demand scenario picture remains absolutely convincing as far as real estate story goes. And many of the companies are basically being selected into the portfolio largely because of that. I'm not too sure immediately. I think if there is something available because I think many of the companies, as I noticed, are having the price appreciation advantage because of this favorable conditions in which they are already into the marketplace. Maybe some corrective downside in the market in a given period. That would be the right time to buy into real estate. But long-term outlook remain absolutely convincing and positive on the real estate companies, particularly the housing companies, as I see.
Into the conversation, and Deven, I wanted to talk to you about some of these manufacturing names, especially the likes of Canes, etc. They've become very expensive, and if I look at the earnings on a year-on-year basis, it's actually pretty much okay. The revenue is up 50%, margins have improved 120 basis point, the PAT margin has improved by 300 basis point, order inflow has improved, but sequentially there's a bit of a dip. Do you think there's still value to ride these stocks on the upside?
Well, I think if you are asking for near-term price outlook, definitely I think most of the companies have perfected, I think, the price as far as their outlook is concerned. And that's where probably you are not getting enough amount of opportunity to earn in the near term. And this market is becoming, I think, challenging for value picking. Let me tell you, because most of the company's stock prices, they are basically discounting 2 years in advance already in most of the cases. That's where I think the challenge would lie. However, I think the market has the habit of pricing expensive in the near term and may be available at some point of time for the corrective prices. Today, the margin of safety in this kind of companies definitely I think is asked for. It's not available immediately, but still we believe that I think opportunity would be around in the market. Some of the technology players in the mid-tier segment where we believe that the opportunity would be ripe, I think at a corrective prices, of course, could be the likes of LTTS, even for that matter, Tata Elxsi, even for that matter, Science Technology. Some of these companies, even KPIT for that matter, some of these companies have relatively higher amount of potential going forward. Maybe the price correction at some point of time would give the opportunity to investors to buy them into portfolio, and that would probably be allowing some value to get created thereafter.
This is one of those companies surprised everybody, including me, including Kunal, and I'm sure Naresh, and Deven buys NTPC. Now NTPC Deven buy. Is he there?
Yeah, Nikunj.
सुबह WhatsApp check कर रहे हो Deven bhai?
Sorry, Nikunj. Tell me.
No. So what's you want to carry on with your WhatsApp? I can come back to you.
Yeah. No problem. Please.
No, I got this on my WhatsApp, so I'm asking you. Somebody is asking me that why is NTPC outperforming? I mean, it has got nothing going for itself in terms of the ESG factor, a regulated business. It's a business where we know that capacity expansion is not coming and they're still thermal dominated. Why is NTPC going up the way it is?
So I think that is one area where I have studied, Nikunj, one important aspect that all government companies, the public sector enterprises, I think have suddenly started attracting investors into the portfolio. So let's take one by one. Suppose if NTPC kind of a company did yesterday, if it was a taboo not to touch those companies because of the environmental issues, today many of the funds have found out the alternative to buy into some of these companies. I think where, despite of I think the situation continuing on the environmental side of the concerns, they still want to buy this company into the portfolio. Maybe I think the valuation wise, many of these enterprises have remained, I think, quite underpriced. And that is where probably I think the larger amount of money which is flowing into the market is trying to find the opportunity into those companies which are having discounted valuation. Many public sector enterprises are actually falling into this category today. Another aspect is that because of the infrastructure spending by the government, most of the public sector enterprise companies today are having larger amount of order books, largely due to the spending on infrastructure, largely due to the railways, due to the defense, etc., where I think the order books are swelling. And that is also attracting the attention of people. So when you look at the PSE index, at that point of time, I think some of these companies are going to become the part of selection automatically because the products are getting created based on this particular index. And as a result of which we are seeing the allocation of money going into them. You are absolutely right. There is nothing which has changed from yesterday to today as far as I think the fundamental prospects of these companies are concerned. They were good. They are likely to remain good. Nothing going to be very exceptional. But the only technical factor, which as I explained, I think because of the higher amount of allocation of money going into PSEs, that is where I think the index related stock buying also is taking place. And that's where I see most of the companies are participating into this rally. Nothing beyond that.
Okay, so that's the take coming in as far as some of these power utilities are concerned. The under ownership and the excitement around the public sector power space is definitely quite palpable. But we were speaking with the management of Nestle as well, Deven, and they're quite positive about the volume growth going forward, though they point out that food inflation, the worst of it is not over. But then I think that there should be this tailwind of at least, a couple of quarters down the line that food inflation will also bottom out. What's your call on Nestle and the other consumption stocks?
In fact, I think the important aspect for most of the FMCG companies, what we are observing that the higher amount of demand is coming from hinterland, the rural India, and that is very, very promising. Not very surprising though, because in the rural India, the amount of income generated in the hands of individual for spending purpose is definitely increasing. All the economic parameters are also suggesting so, but largely because of the fact that the government is spending significant amount of money in building the infrastructure, which is directly benefiting the rural India. That is where probably I think you are seeing the higher amount of demand continuing, be it Nestle, be it Britannia, be it even HUL for that matter, or even recently I think the likes of Dabur and Marico also confirming this particular trend which is happening. So in from that perspective, if you are looking at, I think these companies are definitely having higher demand scenario continuing, and that is what is more important. Sustainability of the higher demand continuing is more important. On the other side, the margin factor certainly I think is a factor I think which is going to have its negative role to play in most of the companies. What I'm observing that many of the FMCG companies, including Nestle and Unilever, they are investing significantly into the logistic. They are investing significantly into the technology to predict the demand scenario from different pockets. And as a result of which, I think they're making the entire operations becoming very efficient, which is possibly taking care of some part of the inflationary pressure which is getting created due to raw material. So this is an interesting trend which is emerging for many of these companies. Though we remain absolutely convinced about these possibilities, I believe that somewhere I think the valuation correction in the market would give a better opportunity to buy into some of these companies. Fundamentals remain good, but the valuation comfort will come only when the market gives the price correction. That is where one could possibly buy at 10-15% lower if at all it is available.
Uh, why are NBFC stocks going higher? I mean, banks is where the growth and the CASA and the liability franchise seems to be shifting. But in last couple of days, it's the NBFC space which is looking mighty excited. Is this just a deep swell or anything else?
I think studying individual companies, Nikunj, I think likes of Poonawalla FinCorp or even for that matter Bajaj Finance, uh, I think what you are basically observing from them that on one side the credit growth is continuing and continuing big time. In case of Poonawalla FinCorp, I think they are also seeing a larger amount of traction coming from SME enterprises where their larger focus is. And I'm not completely surprised because the SMEs are basically talking about higher amount of business growth in their businesses. And it is this fintech company, I'm calling them fintech company because they're using significant amount of fintech at the top, at the front end in driving the entire acquisition of business as well as I think serving that business. The likes of Poonawalla FinCorp, likes of Bajaj Finance, they are actually powered by the front-end use of the FinCap and at the same time processing loan in the back-end enterprise and at level, which is basically giving them the advantage compared to banks where they are basically processing it faster. As far as the cost of fund to the borrower is concerned, earlier days I think there used to be I think a quite a marked difference. Today I think between the bank and the NBFCs, when you look at the cost of funds to the borrower, there is not major amount of difference at this point of time as we see it. So that is also another reason for which I think these banks are having the advantage. And at the same time, their cost of capital, though I think little bit expensive, but still I think they're in a better position to generate margin largely because of the subvention pricing model which likes of Bajaj Finance would drive, they are basically having the advantage of. As far as I think the housing finance NBFC is concerned, I think it is due to largely due to the demand for housing, including from the rural and affordable housing, which is continuing. That is where probably I think the business is going. So completely not surprised though, I think I would say from NBFC's perspective. I feel that the use of fintech in disbursing loan, cost of capital comparatively I think manageable, and at the same time I think driving the business efficiently are the factors which is propelling probably the price on the NBFC side. Though some of them have basically remained slightly elevated on the price outlook, but I believe that they remain interesting opportunities from investment perspective.
All right, Deven, good to have you on board and share with us your outlook on the markets as well as individual stocks and sectors. Let's get a move on then. And Zomato in the spotlight. The Rajasthan